To enjoy a comfortable future, investing is absolutely essential for most people. First, the best investment strategy is a diverse one. Creating a broadly diversified portfolio can lower your risk of loss. A portfolio should include a mix of stocks, bonds, ETFs, and cash across different industries. If one investment dips or an entire industry takes a nosedive, your whole portfolio won't be affected and the loss won't break your bank. So in this video, we are going to tell you 10 best investments of 2021 to 2022. The video is going to be amazing, so make sure you stick till the end. Before starting the video, be sure to smash the like button and subscribe to never miss out on any of our videos. Number 10. Real estate. It is considered to be quite a low-risk investment, as real estate markets usually keep a steady growth and appreciate with time. However, it may be overwhelming to take everyone's opinion and advice into account when investing in real estate. The fact is that unless you haven't done your little homework and research before investing in real estate, there are possibly little to no chances of suffering from a significant loss. The unique thing with real estate is that investors usually shy away from illiquid assets due to the lack of ease when converting the asset to cash. But real estate or property, you can say, is one particular asset where liquidity is generally considered to be okay. There are two ways to make a return on your real estate investment. It can either be rent, which is income on a monthly basis, or a capital gain, which means the overall value of the property appreciates. Another huge advantage of owning real estate is that it can give your kids or future generations an income-generating asset which they can sell when they are in need of money. Number 9. Start a business. Building your own empire and having a regular cash flow of passive income, profits, and increasing net worth sounds like the dream, doesn't it? Apart from that, unlike any other investment which may pay you dividends or capital gains upon rising, having your own business will pay you much more than that. In fact, you're going to be the mastermind of how your business makes money and how everything works. One of the biggest advantages of this investment is that everything is unlimited, which means that there's no approximate or set limit of profit or revenue. Your business can have either downfall, grow steadily, or skyrocket. It's all about how you handle it. You can start a business with $100 and an opportunity and turn it into a multi-million-dollar international company over time, which is why it is said that your business is your valuable asset. Number 8. Cryptocurrency. There are usually two possibilities that you need to be aware of in investing crypto. Firstly, if wrong and rushed decisions are made, such as investing in unfamiliar cryptocurrencies, significant loss or even losing all your money is quite possible. But if you invest with the right knowledge at the right time, making quite a huge fortune with little to no effort has its possibilities. As it is considered quite an aggressive, fluctuating asset, it is usually recommended that crypto should hold around 5% of your investment portfolio only. Number 7. High-yield savings account. Perhaps the simplest and effortless investment yet, a high-yield savings account essentially gives you interest on your balance, and these interest rates are much higher when compared to typical savings account. Considered much more on the safer side of the risk category, high-yield savings account can only carry the risk of being affected by inflation, as the money you're investing in the protective assets, the risk of it devaluing due to rising inflation is quite possible. But aside from this, high-yield savings account carry nothing other than advantages like high liquidity and quick access to your cash, significantly less overhead costs compared to average savings account, and require minimal effort aside from a good cash balance. Therefore, counting high-yield savings accounts amongst the best investments. Number 6. Mutual funds. First of all, let's understand what a mutual fund does. A mutual fund collects money from investors like us and puts it into further channels of investments like stocks, bonds, and other securities. To your advantage, these investments do not require any of your time and effort because they're managed by experienced fund managers. And although mutual funds may carry a narrative of being a very high-risk investment, it's only partially true. Losing your money in mutual funds is possible, but the chances are really low because of the diversification of your investment. So if one or more invested securities devalue, the other channels of return are there to cover it up for you, which is why mutual funds are counted amongst the best investments today. Number 5. Precious metals. Investing in precious metals is much more precious than it sounds, because not only is it very stable growing market with little to no depreciation, but precious metals can also protect your money from high rising inflation with time. Well, in simple words, once hyperinflation takes hold, the currency in your pocket and bank account are severely devalued. But instead, if you hold protected assets like gold and silver, this hyperinflation period wouldn't quite affect you as much because these commodities retain their value and have high liquidity that allows you to convert the asset to cash anytime you want. Experts usually recommend that around 10 to 20% of your investment portfolio should be in precious metals to keep it balanced. Number 4. Invest in yourself. You have all the money you need to buy stocks, bonds, and properties, but the only thing you don't have is your health and financial intelligence. Why mention these two qualities in particular? Well, if you talk about health, every one of us knows that it is the most important thing we have and need to make beneficial decisions. If you don't invest in improving your quality of life and well-being, how are you possibly going to invest in money-making assets while lying down on the hospital bed? Well, even if you do, what's the point? You simply can't celebrate, enjoy, or benefit from it anyway. Moving on to financial intelligence, investing in this particular area of your mind will take you to the next place. And how can you invest in it, you may ask? Well, by simply putting in the extra effort to read financial books and acquiring the most relevant information to whatever sources. Number 3. Intellectual property. Let's say you're a graphic designer and you've been requested to design a logo by a client for his or her clothing brand, which he's paying you $500. So the $500 the client has paid you is for developing and transferring the ownership of the intellectual property to them. Now you may be asking, how is this an investment? Well, then intellectual property investment is made, a much higher capital return is expected. To make it even easier, let's take into account intellectual property investment stories from the past. Andy Warhol, the artist behind the famous For Marilyn's painting, was first sold in London for $1.6 million in 1992. Later on in 2015, the same painting sold for close to $36 million at an auction. Crazy, isn't it? Well, yeah, that's right. There is successful intellectual property investment, but intellectual property isn't only limited to art. It can include other intangible assets like patents, trademarks, design, and even web domains. Number 2. Private equity. Private equity essentially works the same as a mutual fund, where money is collected from investors and is put into potentially profitable entities like startups, ventures, or private companies. The funds raised may be invested towards the growth, efficiency, improvement, or development of a business entity. The twist here is that compared to a mutual fund, investing in private equity comes in with a much greater price as well as a risk because of the ventures being in such an early stage, therefore making it quite volatile to fail you. As of 2019 alone, it is estimated that around 90% of business ventures fail, and this can be due to multiple reasons, which unfortunately aren't your concern as you are just a venture capitalist and your job is just to put in money. If the business venture fails, it fails and you simply lose your money. But you know it, it's all about taking risks. Investing in private equity opens up opportunities. You can either lose all your money or become a significant shareholder in the next billion-dollar company like Apple, Amazon, or Google. Number 1. Exchange-traded funds or ETFs. Similar to stock trading, exchange-traded funds or ETFs are solely based upon the demand and supply factor, which kind of separates them from the traditional mutual funds. Usually traded within stock exchanges, ETF investment works by either giving off dividends or capital gains to investors and are generally considered to be towards the safer side of the risk category, as the majority of ETFs are index funds, which are not likely to downtrend anywhere in the near future, but the prices of ETFs are usually very volatile to fluctuate throughout the day because of the demand and supply mechanism of the trade. Unlike mutual funds, ETFs benefit from having lower expenses and are much more tax efficient in comparison like stocks, bonds, or any other sort of investment. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Do not forget to subscribe to our YouTube channel. Stay safe, we will be back soon with another video.